Hello there. Part 1 of Tutorial Series 2 of Bite-Sized Corporate Reporting will look at another question on tangible non-current asset. A link to the question is included in the description. As always, we'll start by looking at the question requirement, which is to advise Legend on how the new plant shall be dealt with in its financial statements for the year ended 31st July 2023. The new plant falls within the scope of IAS 16 as it is a tangible item held by Legend for use in the production or supply of goods. Next, we need to deal with the issue, that is how the information given in the question would be dealt in the financial statements of Legend for the year ended 31st July 2023. Thus, we will start by discussing the measurement principles on initial recognition. The installation of the plant was completed on 31st March 2023 during the financial year ended 31st July 2023. On initial recognition, the plant shall be measured at cost. This includes 1. The purchase price, 2. Any directly attributable costs of bringing the plant to the location and condition necessary to operate, and 3. The estimated cost of dismantling and removing the asset, including any restoration cost. Please note all figures are in thousand. On initial recognition, ABC Ltd should recognize a total cost of 3,950 as follows. 1. Purchase price of 2,500. 2. Directly attributable costs of bringing the plant to the location and condition necessary to operate of 1,150, comprising delivery and handling costs of 200, professional fee of 700, and site preparation of 250, being 10% of the invoice value. 3. The estimated dismantling cost discounted to its present value of 300. The following expenditure do not qualify for capitalization. 1. Operating losses. IAS 16 specifically disallows the capitalization of operating losses, as these operating losses are incurred as demand builds up and before the plant is used at its full capacity. Capitalization ceases upon the asset available for use, that is, capable of operating in the manner intended by management. 2. Interest on the credit purchase of the plant. IAS 23 permits capitalization of borrowing costs on qualifying assets, being assets that necessarily take a substantial period to get ready for intended use. However, the interest on credit purchase of the plant does not meet the capitalization criteria of IAS 23, as it is incurred after the asset is ready for intended use, arising from the credit term accorded by supplier for settlement of amount due. The total interest is calculated on the amount due to the supplier, that is the invoice amount, and the cost of site preparation works carried out by the supplier. The total interest of 41.25 shall be expensed to the profit or loss. The plant shall be included as property, plant and equipment carried at cost less accumulated depreciation in the statement of financial position as at 31st July 2023. Any depreciation relating to the plant as well as the interest costs on the credit purchase shall be charged accordingly to the profit or loss for the year ended 31st July 2023. In the second part of Tutorial Series 2, we will look at a question on borrowing cost.